Good morning. It's Monday, September 2nd, Labor Day. Bet you guys didn't think I was going to do a video. It's a little bit later here, but don't worry. I was working on a write-up here for seasonal analysis on the precious metals covering the month of September. If you didn't get that in your email box, shoot me a note at phil@BlueLineFutures and I'll forward that over to you, or give me a call or text me and I'll send it over, no problem at all. So looking at the precious metals here, and they are actually trading right now. Gold up about $7, 25.34. Silver, December silver right at about that 29 level. So we'll see how that kind of holds on here. A lot of the trading right now is electronic. It's a short in session, and it's mostly the international clients that are trading it at the moment. So looking at the precious metals, we do kind of have this summer setback, and it also gives us a fall opportunity when you come into the month of September. Fortunately, when you look at where we're at year to date, that the corrections have been much shallower than the rallies, and that's contributed to the gains in gold of about 15.94% year to date, and silver up about 14.5%. However, September is historically negative for the precious metals and the U.S. equities. This could be partly because of portfolio reallocations or tax loss selling. Something I always look at here is the Trader's Almanac, and it's a great thing. They put it out, they sell it at Barnes & Noble, they sell it online and everything else, and it kind of breaks down what happens with the equity markets in various sector styles and things like that, and gives you kind of a nice little write-up here. It's a nice little handy tool to have here. When I oftentimes talk about writing things down in my calendar, this is one of the calendars that I use, and it's a great tool right here. It has an inspiring quote every single day. And one of the quotes here that I'm looking at today is that Ben Franklin, he once said that by failing to prepare, you're preparing to fail. And that's why I look at these seasonal types of trades. It kind of gives me one little tool in my toolbox to maybe plan and prepare for the type of trading that we could see over the next 30 days. Now, it is a holiday here today, but I often find those types of days without the distractions, without actually work or the markets really making these big gyrations here, it allows me to reflect on some of the previous trades. Like, historically, June has been a tough month, and it was a tough month for all of us here, especially along the precious metals. But if we were able to plan for next year when we see that type of seasonal weakness and we kind of plan our attack, I think that we could have improved results and things like that. At least be mentally more sound here as far as when these trades start to rattle the markets and things like that. Now, each year brings something a little bit different. For instance, in 2024, and because we're looking at seasonal tendencies and what happened in the past, 2024 is an election year that's historically stronger for markets. And additionally, the Federal Reserve is about to embark on an interest rate cutting cycle. Now, if you look historically since 1980, gold futures have rallied on average about 6% within 30 days after that first interest rate cut after a hiking cycle. Now remember, past performance is not indicative of future results. So what we do here is we start to look at some of the breakdown, and this is in the email that I sent out. Again, you didn't get it, shoot it over to me, shoot me a text or anything else. I'll forward it over to you. So if you look at gold, starting on Labor Day weekend, and you go approximately to about September 28th or the end of the month, the number of down years has been quite eye-opening, and we've seen declines 5 out of the past 5 years. We've also seen declines 10 out of the past 10 years. So the win percentage has been 0, and really you got to go out to about 15 years out before you start getting even any positive days. We saw our first positive day in 2012, 2010, and 2009. That was kind of the snapback after the financial crisis. You also get into things like the silver market. You look at the past 5 years and that analysis, it has been down over the past 5 years, 4 out of the past 5 years. We also do publish a couple other things here on this data that I sent out. We give you a 49-year breakdown on the gold market over the course of the month of September. On silver, we give you a 61-year breakdown. That's where I joke around about, hey, I'm just going to backtest the whole thing just to see what happens here. So, while that type of of negativity over the course of September can really be heartbreaking. It's the end of September that paints a very different picture for the gold market. Futures on average have rallied 13 out of the past 15 years, and often a slight pause in early November, and then futures take back off again from Thursday into the new year. I do a complete breakdown on that as well, where we look at gold futures perhaps going long approximately around September 30th, and then going long into about the first week of November, and I give you those types of breakdowns as well. Now, what I think from a trading standpoint is we should see some of this material weakness in the precious metals over about the first 2 weeks coming into that first Fed meeting. And then from there, I think the bottoming action might be a little bit earlier than you'd be surprised. And again, this is just one tool, again, in a trader's toolbox. I cannot stress enough that seasonal analysis, it has this past performance and a lot of people like to play on it. But what I find is that position sizing, risk management, defining a comprehensive trading plan will play much more of a significant role in a trader's success than any other factor. So I want to cut this video a little bit short here, but I did want to put something out to you guys and something to really think about here as far as how you're going to prepare to trade in a month that is historically a lower trending market for the precious metals markets, and how to use that as a springboard for the remaining duration of the year. If you got any questions on futures and option trading, definitely give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.